Hi, everyone. I want to talk to you today about the ultimate superpower when it comes to investing. So here's a table of the top performing stocks in the S&P 500 over the last 30 years. And if we look at a table like this, what immediately stands out are the eye-popping returns: 20,000%, 30,000%, 50,000%, even 200,000% returns. What's missing? Well, the periods of excruciating pain for investors. When we think about the biggest winners in the markets, pain probably isn't the first word that comes to mind. We tend to focus on that final outcome. So in the case of Monster Beverage, which was the best performing stock in the last 30 years, we focus on that 260,000% return number. What we don't think about are the drawdowns along the way. So an investor in this company would have had to sit through a 6-year drawdown of 88%, and two other huge drawdowns over 50% that lasted 5 years and 4 years. If we look at Netflix, another company in the top 30 over the last 30 years, everyone's familiar with the Netflix of today. That's what you think about, the streaming giant, 200 million global subscribers. You think of many of the hit shows are on Netflix. It's returned 35% annualized to its shareholders since its IPO. Is one of the great growth stories. What we don't think about are the many difficult times Netflix had along the way. So Netflix goes public in 2002, and right away Walmart starts this DVD by mail business, and people are predicting the death of Netflix. How can they compete with Walmart? A few years later, Apple and Amazon start this movie downloading service, and once again, they're saying the death of Netflix, because how can they compete with Apple and Amazon? Then in 2007, Netflix announces that they're going to start a streaming service. And at the time, it wasn't well received. The stocks goes down. You had many analysts downgrading the company. It was going to cost tens of millions of dollars, and they were saying this is too much and it's not going to work out. And actually, at the time, don't laugh, but they were saying that Blockbuster, who was launching an online rental service, was going to beat them because Blockbusters has all these locations. And there's actually a quote from the Blockbuster CEO we have from back then saying, "We have everything that Netflix has, plus the immediate gratification of never having to wait for a movie." So we all know what happened next. Blockbuster goes bankrupt just a few years later, and Netflix becomes one of the great companies, the great growth stories in history. Now, for Netflix investors, though, that wouldn't happen without these periods of pain. You have enormous drawdowns, two huge drawdowns over 75%, with one occurring after they start that streaming business. So Netflix is just one example. What if we look at a company like Amazon, another top 30 performer over the last 30 years? Everybody knows the Amazon of today, the global online retail leader, 470 billion in annual revenue, a 36% annualized return for their shareholders. Just an incredible growth story. But Amazon didn't have it so easy always in the past. And if we go back to their IPO back in 1997, there was an article in Fortune saying why Barnes and Noble may crush Amazon. And the quote from that article actually said, "Anything Amazon.com can do on the internet, so too can Barnes and Noble." So Barnes and Noble has their own website at the time, and the thinking was that they have all of these retail locations. You can order something online at Barnes and Noble and just go pick it up at the store. It would be quicker than Amazon. Shipping at the time was actually pretty slow. So they were saying, how is Amazon going to compete with this bigger incumbent? So we know what happened next. Amazon obviously becomes the giant that it is today, but not before a period of huge pain for shareholders. So Amazon peaks in 1999 during the dot-com bubble, and would go down over 94% to its low in 2001. And just to give you an idea of how large a 94% decline is, if you start out with $10,000, you're left with less than $600 after a 94% decline. So needless to say, how many investors would sit through such a decline? Very few. But what about Apple? Another one of the top 30 performers. Everybody knows Apple today. It's the largest company in the world. It was the first US company to hit 1 trillion, 2 trillion, $3 trillion in market cap. You have the iPhone, the iPad, all the different products. Surely Apple didn't have the same struggles as Amazon and Netflix. But if you go back and look at their history, you find a similar story. Apple actually had a revenue decline of 50% from 1995 to 2001. It took 10 years to hit a new high in revenue. And if we look at terms of shareholder declines, just you have these huge drawdowns, two drawdowns over 80%, one that lasted from 1991 to 1995, and then again from 2000 to 2005. And even after the Apple launches the iPhone in 2007, it would go on to have a 60% drawdown during the financial crisis that didn't bottom until March 2009. So if we look at any one of the companies in the top 30, if we pick any one of these companies, it's going to tell a similar story, which means really that a necessary component to having any big winner is being able to sit through the big drawdowns. You have to be able to take the pain on the downside in order to have the upside. So I like to think of investing as a series of rolling hills where you have that higher hill and further out in the distance. And in order to get there, you have to have the downside of the hill. So you can't go up the next hill without going down the hill before it. So it's an important concept I think investors should learn, but the question always is, well, why can't it be more like a mountain? Why can't I have just the upside with none of the downside? Why can't I have the next Apple or Amazon or Netflix and just time my exposure to have only the upside? Unfortunately, investing doesn't work like that. It's very difficult to time your exposure to these things. You'll probably miss most of the gains if you try to do so, because you're going to sell at the worst time only after a large drawdown, and you'll probably get back in at a much higher point. So to reap the biggest rewards in markets and investing, to have access to the biggest winners, you have to be able to take these hits. You have to be able to take these hits and keep moving forward, which is why I like to say that the ultimate superpower when it comes to investing is really being good at suffering. So I want to end with a quote from Amelia Boone, who was the only 3-time winner of the world's toughest mudder competition. She said, "I'm not the strongest, I'm not the fastest, but I'm pretty good at suffering." And if you can learn to be pretty good at suffering, you can become a pretty great investor.